Hello everybody, welcome back. Let's have a look at some of these coins. So it's mainly all about Bitcoin still, but there is some strange, not strange, but some reassuring things going on with the altcoins. However, I wouldn't get too excited. What we're looking to spot really with some of these altcoins isn't particularly, the fact that they're going to rally or moon. We're just I suppose observing their strength versus Bitcoin, mostly the top cap coins really. There are some other outliers, so mainly we're just going to focus on Bitcoin, and we'll have a brief look at the Bitcoin dominance and just recap as to what we were saying yesterday, just make sure that the sound's working okay. Brilliant. Right, so this is Bitcoin on the 4-hourly. So we're still battling in this 4-hourly zone, being rejected from the 10 exponential, which is the main thing. That battle is well, it's slowing at the moment. It's slowing, but you could argue that it slowed down here and broke down even heavily. Even worse, in fact, where we basically came into contact with the center of the Bollinger Band, all on the 4-hourly, all bearish setup. Moving averages all in their bearish situation. Everything's bearish as far as moving averages and price action is concerned. So this leads me to believe that if we do come down, we could be rejected as of right now. We have tested this 10 exponential again, and we have not reclaimed it. Just poking our head above it like this, what we really want to see is not just a little close above it like this. We want to see a conscious close above it and a retest of it. But as the 10 exponential and the 2 and the 20 moving average, or the center of the Bollinger Band, whichever you prefer to call it, coming in quite close to each other. I mean, it's just more areas of resistance at a closer area. So personally, and until a conscious effort to break above, I'd probably say at this level now, the center of the Bollinger Band, and the price of that is currently about just over $51,000 as of this area right now. Every 4 hours, it looks like it's going to be going down by a couple of $100 every 2 hours, every 4 hours. So, I'll probably be looking for a retest of somewhere towards these lows. We had two candle bodies here, maybe a retest of that zone, which is coming at about 48,000, 48,500 at its lowest, which is where this wick was more or less. We're still bearish at the moment, I have to say, on the 4-hourly. On the daily, I have to confirm that we are still bearish as well. Confirmed lower low. So all of this does lend itself to further downside, and that's what I would be expecting. And again, put things into context. We've rallied pretty hard for quite a long time. Maybe it's time, for some people to take some profits, which is clearly what's happening. Does this mean that's the absolute end of the bull run? In my opinion, no, it's not, because as we discussed on the video yesterday and in the live streams, that there still is a larger cycle at play, as we see on the weekly, which is the main thing to focus on. The weekly is the larger cycle, and that is still very much in play. But it doesn't mean that we can't come down having a correction. It's it's very, very normal, I'd say, to have a correction. Depending on what your strategy is, it depends on how much pain you're willing to endure. Depending on where your entry point is, depends on how much pain you're willing to endure. And there's likely to be some more pain. As we said yesterday, this is my first area of significance where a really significant bounce is likely to come in. But by basically, as of this, by tonight really, we're going to have a new weekly candle body close, and this moving average will move up a smidgen, meaning that areas of about 45,000 or just above that would be a really strong area of support. As we got a candle wick. Two candle bodies in a row. We'd also have the 20 weekly hanging in around about those zones. It's worth noting as well that if we go to the daily, the RSI is low, but it's not technically oversold. It can easily go for another stab down. If we have a look at how these stabs have performed in the past, obviously these corrections were above all major moving averages. These were dips, really, not corrections. These were dips, and we did find significant bounces on the green 50 exponential each time, and we weren't as low as we are right now on the RSI. So the last time we were in a situation like this where we were below the 50 exponential, actually we've not been below it for a very, very long period of time. This dump here, I suppose, was the last time, and RSI was here. So different, I suppose it's all very different behavior to what's going on right now. What right now looks to me is that a correction is in play, and a correction can take weeks and maybe even months to play out in its full entirety. They can be slow, they can be drawn out, but they're also, you know, opportunities to at least just buy for bounces or even short at resistances. But right now, you know, we are more or less at the bottom of this Bollinger Band area, and if we did get a wick down here, you know, it may have continuation in the short term. It would slightly, you know, I would imagine get bought back up. But again, yeah, this is becoming more and more of an obvious downtrend now, and that's how we're looking to observe this as a downtrend. 4 hour is the one that's really got to have it, and if we're going to find any kind of fast turnaround, we need to start reclaiming these moving averages and having them not just reclaimed, but to start bending up. At the moment, they're more or less getting stronger. At least the 250 and center of the Bollinger Band, your 20, they're all kind of developing, I suppose, more and more strength in their downtrend. Nothing particularly to see here other than well, a potential area now for a little bounce, and the bounce could take us up to areas of 53,800. Now if we go to some of these other time frames, we can have a look at some other areas for what could be considered a, well, you call it a lower high. So that was 53,800. That also comes in with a 3-day where we had a candle body close here and an open here. So that would be quite fitting, as the 4 hourly and the 3 daily both give that kind of area as a potential area to be rejected from. And if we think about this in terms of moving averages as well, we have a 10 exponential fast approaching that zone also. So if you were to get a bounce, that would be, in my opinion, the most appropriate area, more or less around 53,500. You get the bounce up to there, and then rejection. So easily can come down further on this 3-day, basically to revisit that last wick, or maybe just a little wick further than that. So you know, there's no hopium on this video for the short-term time frames, certainly not. But there is definitely hopium on the larger term time frames, as there was yesterday. So we have these areas mapped out like we did yesterday, and these are the main areas for reversal, I would say. So the first area would be 45,000, potential bounce for a reversal there. If that breaks down, 38,750, potential bounce reversal from there. And worst case scenario, all the way down here at 29,000, where that really would be... yeah, you would if we didn't get a bounce there, it would be a failed cycle. In my opinion, it would be a failed cycle, and we would really look to be crashing down, and it would all be over. It's a long way away from where we are right now. That is a further 41% or 42% retracement from the price that we're at right now. You know, I'm not going to say it's not going to happen. You know, the MACD doesn't look particularly healthy, I have to say. You know, we were hanging on for dear life on this weekly here. We really, really desperately wanted to find a bounce here. And they're not saying that we're not going to get one. We could still perform a bounce on this money flow index. But if this also breaks down, it would lend itself to a much further retracement, because this is a volume indicator. And if volume breaks down below a trend line that we've got here, a long-standing one on the weekly, then volume really will fall out of this market, like it has done on previous parabolic highs. You know, parabolic high fell out really fast. Parabolic high and did fall down quite fast. But we were hoping, and we could still see a bounce here. But if we did break down from here, then yeah, it might get quite nasty as well. So there's no real way at this moment in time to give any kind of nod to the bulls, because the bears clearly have the upper hand on the shorter term time frames. That's going to cross over onto the larger term time frames, maybe even as early as next week. We'll see where that weekly money flow index read goes, and if it is if we do get a significant drop down and below that trend line, then that's failed, a failed indicator. Well, I suppose it's not failed. It's telling us something, isn't it? We were looking at it as a possible area for a bounce, and if it doesn't perform a bounce, then yeah, well, I mean, it's not failed. I suppose it's telling us that that's not worked out as a bounce, and so it should lend itself to a further downside, potentially a worse one. But if we think about things in terms of where we are at right now, I mean, we are looking to me like, yeah, a lower low has likely been formed already around this zone. We could come down to retest that zone, 48,000, or maybe just a little lower, and then perform a bounce up to around about 53,000, and then get rejection from there. So that's the Bitcoin situation, and that's how it performs at the moment. That's how I'm viewing this. Bitcoin dominance, which again, you know, it's a strange situation itself, you know, testing that 50% dominance again, you know, 50, almost 50, 51. Like, this is also a bearish chart, which makes it really difficult to pinpoint what's going to go on with some of these altcoins, especially mostly the top cap ones, the ones that look relatively strong. If this continues to break down as Bitcoin breaks down, it does lend itself to the concept that the bounces are going to be way more significant. As we already saw in the last breakdown, we had a big breakdown across the market, and some of those altcoins bounced massively. I mean, they really did bounce. I mean, we were looking on the live stream at some of these things. I mean, VeChain bounced like 40% in a few hours. You know, it's crazy. Some of the bounces have been crazy. Then actually, when we go back to have a look at some of the things like Ethereum, I mean, Ethereum, this is Ethereum versus Bitcoin on the 4-hourly. It's still looking, it's pretty good. You know, that Ethereum is in an uptrend against Bitcoin on the 4-hourly still, so strong in comparison. And this is one of many altcoins which shows that kind of strange, I suppose, contradiction into where the money ought to go, if anything at all. So yeah, it's a strange setup. But again, you're going to find this more and more as you know, most of us have been used to watching everything go up for such a prolonged period of time. Oh, it almost feels like that's the way it's always going to be. But when you do reach a peak, or even if it's just a temporary peak, and we're about to enter into a downtrend, or even if it's just a temporary one, you know, we do get mixed signals, and it's not as easy as saying this is the top and this is the bottom. It is a matter of working out, you know, who has the upper hand at the moment, bulls or bears. Short term, well, I mean, very, very short term, we're looking for a bounce. But just as you get rejections in uptrends, you get bounces in downtrends. So there's no, you know, short answer to say that we're going to go lower than this on the short term, or we're going to bounce from here on the short term. I would favour another move up to around about $53,000 on the next bounce, wherever the low would be. We could get a favourable bounce in favour of the bulls, but there's a lot of rejection above us. Basically, all the moving averages are areas to be rejected from on the daily, on the 4-hourly, on the weekly, on everything really. There are moving averages above us pretty much on all the significant time frames, and the only thing below us at this point now are previous historical levels of support, which are the things that we've really got to hold on to. We've also got this 200 exponential coming in down at this level too, so it's yeah, I mean, I'm not going to lie, it's not looking particularly good. It's not looking particularly strong. We're certainly not in an uptrend anymore. But it doesn't mean that it's the end of the world. You know, I said this last time. You know, we've for those who've been trading Bitcoin for a while, you know, we're not going to look at this as an example, because that is very different. We could look at something like this, which is the Bitcoin the situation over in 2019. So a very, very strong and quick move up, really, really fast. It took me by surprise. I didn't think we'd be moving to this fast. I thought we would only really get to about 6 or 7 or 8,000 once the bottom had been put in, and we'd have a slow move up. But we didn't. We went too far, too fast, and then had to cool off for quite a long period of time. About 6 months actually we cooled off for. Not going to write this in as a low. This was a different situation. So more or less this was the low, because the whole March COVID situation is a different ball game. So we did retrace 53. Almost 54% over a period of basically 6 months. Are we going to be doing that again this time? Well, if we did, let's just have a look. And again, this isn't the way to do it, but if we were to go 52, 53, it would bring us down close to that bottom area of support. And it could, if we did it over this last over a period of 6 months or so, bring us into October. To be honest, you know, that's not the way to look at this. This is different to this. They're similar. They're both areas in a bull market of consolidation. But they're similar in the way that they were driven. This was driven by excitement for the people who are already in cryptocurrency, not the new people, the new retail investors, all these institutional investors weren't really in back down here. This was already the people that knew about crypto, who were already trading it, just got way too excited pressing that 100x button. This time round, obviously those people were doing the same thing, but at the same time, you know, there was a lot of coverage of Bitcoin with the institutional investment, and this, that, and the other. So very different, but kind of similar. And and yeah, it does lend itself to a further and more long drawn out correction, not 6 months, but at least a couple of weeks, few weeks, maybe a couple of months into the summer, and then a fast turnaround, I would imagine, a pretty fast turnaround I would expect. Anyway, at the moment, like I say, we're trying to work out where the next higher low is going to, the next lower high, sorry, is going to be formed, and that will give us more of an understanding of where this downtrend is going, a bit more of, I suppose, idea of how we can play this. I do honestly favour the downside in the short term, but that's not going to be without bounces. So still an opportunity for bots to be played, leverage to an extent. But or maybe just going into hibernation for a small period of time. But depending on where your entry points were, you know, this is also a shakeout. Like I say, most of my entry points for Bitcoin alone were pretty much down in the a bit below 5,000. So, are we going to go down to 5,000? I'd be absolutely blown away if that did happen. So I'm not really interested in kind of selling, to be honest with you, my hodl bags, because that's what they are. And this so far is just a retracement of about 30%. Well, it's not even that at the moment. It's 26%. 30% would bring us down to the 20 weekly moving average. That's not too bad. And even a 50% retracement is still not going to be enough to shake me out. And that would bring us down to around about, yeah, that's interesting, the 50 exponential on the weekly. So there's plenty more downside. I can't lie to you, there's plenty more downside to be had, but you know, I would choose to continue to hodl my hodl bags throughout that period. Trading it is a very different story. You can, if you feel like you want to trade it, then that's up to you, but hodling is still an appropriate method throughout this, which could be the shakeout that we've been waiting for, a real shakeout. There's a lot of people who have been buying Bitcoin who have never seen a true shakeout before. They don't know the meaning of shakeout, and yeah, this could be the one. This could be the one to remember. This is the one that will test the patience and the loyalty, I suppose, of those people who constantly told me on my YouTube channel that Bitcoin is the future, and Bitcoin will do this, and Bitcoin will do that, and Bitcoin's going to take over the world, and blah 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 blah. If that's your true feelings, then you really do need to just hodl and put your money where your mouth is. I personally believe that we're going to make a new all-time high this year, obviously, but that can't be without some further downside. So this, I suppose, is just a confirmation of where we were at yesterday, and where we were on the live stream, where we were watching it get rejected on these moving averages, saying that yeah, these are areas where we're going to get rejected from. You know, look, bang, we're going to get rejected from these. We've been rejected since the downtrend technically formed its peak, broke down here, rejection here, rejection here, rejection here, rejection here, rejection here, rejection here, picking up pace, getting rejected on the 10 exponential now rather than the center of the Bollinger Band. Death cross. So yeah, that's all I really have to say about it. So yeah, I'm sorry that I've had to bring you the bad news, but again, you know, we can't just go into an uptrend indefinitely. Well, I mean, technically that's what Bitcoin has done and is continuing to do. It is an indefinite uptrend, really, if you look at it in terms of its inception 10 years ago. I mean, it's an unbelievable uptrend, and I'd imagine that uptrend to continue, obviously. So yeah, an indefinite uptrend is obviously very likely for Bitcoin, but right now, we're not really looking at an uptrend anymore. In fact, 2 weekly candle bodies like this, we've not really seen that in quite a while. But it's not it's really not that bad at the moment. And even if it does come down to 50% from the top to the bottom, it's even not that bad as well. Anyway, I'll leave it with you there. Thank you for watching. Hope you have a nice day. Take it easy.